Well, good afternoon and welcome to CHS Ag Services Ag Industry Days, coming to you live here from Grand Forks, North Dakota. I'm Michelle Rook, along with our market panel today. Off to my right is Randy Martinson with Martinson Ag, Duwayne Bosse with Bolt Marketing, and Tommy Grisafi with Advanced Trading. Well, we're happy to be here, and we welcome you if you're joining us live via the Farm Journal YouTube channel as well. So, you guys, let's talk a little bit first off about how it has been a historic year that we've come off of in terms of prices. But we've been in this trading range for a while in really all of the grains, and now we've kind of had a pullback out of those areas. So, Randy, what do you think? Are the highs in for the year?
I don't think that the highs are in for the year. I mean, you look at how the market's behaved here over the last couple of weeks, especially since the Ag Outlook Forum released its numbers, and we've come under some major selling. And even though this was an economics view of what should happen with ag this year for planted acres and where the supply and demand is going to fall, I think the market took it a little too hard. I mean, we still have issues as far as getting the crop planted, as far as even getting record yields for corn and soybeans, which is being projected, I think is going to be a tough sled right at this point. So I don't think we've seen this market put its highs in yet, but not saying that we're going to see this thing push a lot once we get past getting our crop in the ground.
So we've been, in the case of corn, you guys are chartists too, we've been coiling in this chart pattern for a while in corn. We knew we were going to pop out of either the top side or the bottom side. Unfortunately, Duwayne, we popped out of the bottom side. So how much lower do we need to go here in this market? It looks like, we've had a little bit of a bounce.
Yeah, actually, is this on? Use this one. Oh. I'll try this one. Oh, much better. No, I think we actually already made the low. I think a lot of that selling had to do with the end of the month of February, option expiration. End of February, end of June, and then the December options are always really big options as far as volume. So a lot of people had to get out of long positions or put options and take their value. So I think that drove the market down a lot. One other thing we're also seeing, Michelle, now at the end of February is Brazil's harvest is going on, right? They're using our board more and more to sell. So it's almost like a mini harvest season. So they're selling on the board as well. And then what happened is with just what you mentioned. So we had that option expiration, we sold down, and then the chart got wrecked. We coiled sideways for so long, and I think the week before you and I talked about that coiling, that once we break, we're going to make a pretty big move, and we did that. Sadly, it was to the downside. So then the chart looked bad, Tommy, and then the seller stepped in and sold the technician. So that's what dropped us so hard. But I think we can get March corn back to 650 on her, just a rebound off of this.
So are you selling at that level then? Do you think if you have any old crop left or what?
I'm not selling. Maybe that's wrong. Probably should have been selling before. But to what Randy said, I think we've got a lot of ifs in front of us. A lot of, will we get all those acres planted? Are we really going to get that 180 record yield that USDA is throwing out there right now in the Ag Forum? I think that's really wishful thinking. So I think, well, here's what I do think. I think you're going to have a weather scare somewhere, Michelle, this spring. And I think that rally, that's your opportunity to clean up those old crop sales.
Well, if you far too fall, Tommy, then you start getting end users that come in and see this market as a value. I mean, we heard yesterday already that there was maybe some China corn business.
Yeah, the sell-off was very intense. And to Duwayne's point, that the 40-cent sell-off, that's normal. That next 20 cents kind of caught some people off. But if this is a room full of producers, if you turn your head around and you go to the end user, if we have any type of production problems this year, you're going to look back and say, I can't believe I could have bought May or July futures that cheap. Now, this group, what they have to know is they got a little taste of what it's like to store and ignore a 50-cent move down in corn for February, whereas my young friend Ted there said he just bought a T-bill or a 3-month CD and got 4.5%. So you could have sold that grain many months ago, taken your cash and got 4.5% instead of watching it break 8%. If you trust the science, if you trust the math, the math said sell your grain a long time ago. Now that's so easy to come on stage and tell you what you should have done. But anyone who looked at the futures board knew that May and July futures were much lower. So the only thing you could have been truly hoping for would be a basis play, or someone like Duwayne, who's had year after year, they're not sure. He's not sure he's going to have a crop in 2023. And that's the problem, because with all the snow and everything else. So someone like Duwayne up here in South Dakota, North Dakota wants to make sure they have a crop they'd be much more comfortable selling it in the summer months, but it was so expensive to store that grain.
But the basis has been so strong for corn, and that has kind of lulled some farmers into a little bit of complacency, don't you think?
Yes, but if you don't sell a strong basis, then you get the flip side where you get future spreads weakening, basis weakening. I'm not so sure that America is so short on grain as I am for sure how the American farmer has so much cash right now that they could afford to make a mistake, and it cost them this time, him or her. And they may get out of this and get a rally. No doubt in my mind we could have a big rally, but that's where I like to use an option. When you can pay 10, 12 cents for something in July, maybe even 15 cents, if we do go down more, I think it's going to catch people off guard. Real quick, not only for 22 crop bushels you have, the sell-off hurt people much worse. If you had a lot of 22 crop, nothing hedged for 23, and have done nothing for 24, last week hurt. If you moved your 22 crop, bought options from any of these fine young brokers up here, and then, or you don't even need a broker to buy an option, by the way, you could just do it on your own. So fire us, do it on yourself. I'm okay with that. But do it. So if you sold the grain, bought the option, you're in control of 22, how in the heck can you talk to a farmer about marketing 24 when they're totally out of control in 22? So you get in control of 22, you get hedged, protected in 23, you have the good crop insurance level. I know a crop insurance guy if you need one. 2 of them, actually. Tell me that's not a good business. What am I doing wrong? All right. And then you can move to 24. So my best marketers have some aggressive sales and protection in 24, and that's when last week doesn't hurt so bad.
So let me ask you, though, to go back up and challenge the highs in corn, and we'll just talk about corn for the time being. We're going to need either a problem with what? Brazil's second crop corn, the safrinha, or we're going to have to get exports to improve because corn exports are down, what, 40% from where we were a year ago? Or what else do you think could move this market?
I think it's going to be a combination of those two. I think, we already are seeing a little bit of trouble with the safrinha crop. I mean, 50% of that crop is going to be planted after ideal planting dates. So there is already a little bit of an issue with the crop. And, this week they've had some good opportunities to harvest some and to get some planting done. Next week, the rain's supposed to come back. So I think there is an issue with the corn crop already in Brazil. On the flip side, you look at what we're seeing, corn, kind of to these guys' point, is that, I think corn is taking a step back because it's got the acres according to the Ag Outlook Forum.
Right, 91 million acres.
Which is quite a bit higher than last year. So corn is sitting there saying, okay, I've got acres to lose. You guys need to come get it from me. And I think that's why corn has gone complacent. But we are now looking at, all of a sudden, a big change in our weather forecast up here in the Northern Plains. We're looking at March going from being nice and warm and snow melt to storms every 3 to 4 days, more snow, colder temperatures. It's going to take a while to melt all this snow. And we're not going to see likely a plant date come into play in the beginning of April or the middle of April at this point, the way the long-term forecast is playing out. And that's where, Duwayne and I's area,
you think there's going to be some prevent plant, don't you?
I think there's going to be prevent plant.
Yeah, absolutely. I mean, we had 6.4 million acres of prevent plant last year. Remember last June, we spiked up, right? Or last spring we did. We had 750 D's corn. Why couldn't we get the acres planted last year? I don't think the total principal crop acres are actually out there that they were before. I know if you look at the USDA Ag Outlook Forum, they're right on line with the last couple of years, Michelle, but I just don't know if the acres are out there because why couldn't we get them planted last year? So yeah, we're working with the 91 million acres of corn right now. And I talked to everyone around in this room. It sounds like everyone's leaning towards more corn acres. On my farm, Tommy, I'm budgeting for more corn acres, but the amount of snow I blew off yesterday just to get up here today tells me it's probably not going to happen. So to answer your original question, Michelle, I think the corn market struggles for a while here, like Randy says, because there's no bullish news. But you start taking some acres off. Last year, the Outlook Forum, we were 4.2 million acres too high from there till June. You want to have some fun today, go home and play with your spreadsheet and take 4.2 million acres off corn, wheat, soybean somehow, and it gets tight in a hurry. Tommy's right. We should be using risk management, but maybe have some upside potential. And that's where my bullhorns start to grow again.
But then, at the end in January, USDA came in and lowered harvested acres another 1.6.
Yeah, harvested acres obviously was a big play last year because of the drought, and that finally did play into things. Okay, So this corn soybean ratio right now still does favor corn though, right, Tommy?
It does, and there's a rotation, and farmers like to grow corn. It seems psychologically when a farmer has a grain bin and a dryer, they get really upset if they don't use it. It'd be like having a sports car and having a perfect day and you didn't take it for a ride. Like, why do you have it? So when you have the grain bin and the dryer, once an area, this area, Duwayne's area, I'm sure when you were a younger man, your father didn't plant corn, right?
Not much.
Right. And
Yeah,
so,
and the Dakotas, no.
right. And so as corn has been introduced in the short dated, going back to what Duwayne said about planting corn on June, I planted corn with a farmer right outside of Fargo on like June 5th. I was with Mr. Don Wick from the Red River Farm Network. He's, of course, you know the voice, but that corn, remember that, Don? He switched his hybrid from like a 92 to an 80. Yeah, they grew 180 bushel corn, and their fear was that they were going to grow like 140, 160, get frosted off. If Mother Nature is kind to you up here, which she's not always, you could really use a short-dated hybrid and get great yields, but there's a lot of ifs there. And so there's so many things that can go wrong here that after it all goes okay and it was an ideal harvest, you say, why didn't I do that? Because the price to play the game is so expensive now that the reality of putting all those inputs into a crop and not growing it could really be bad. So at some point you start to say, let's slam in those soybeans on June 5th and see what happens. And that worked out also for growers up here.
All right, so let's talk about acreage as well from the forum. 87.5 million acres on beans, which would be the same as we had last year. Do you think that that's realistic? And is that enough acres with what we're seeing for soy crush demand right now? Anyone want to tackle that one?
Okay, I'll start first on those acres. Well,
And
obviously,
remember, these are theoretical. They're not based on farmer surveys.
He's wrong. He's writing a check. He whispered that to me before we went.
yeah, I'll stay afterwards and buy everyone a beer. That's right. On CHS, by the way. Thanks for having me. So on the acres, obviously, I think they're a little too high. And to your point on soybeans really can't give up the acres.
Right.
And really, none of the crops can. Corn's got a little bit of wiggle room, but we got to remember our old crop stocks are so much tighter than they were a year ago. I mean, for corn, we're 833 million bushels smaller than a year ago. We rallied to 750. For beans, we're 120 lower than we were a year ago, 120 million. So to me, it's the old crop tightness that means we have to get the acres. So I'm kind of avoiding the question. Beans need the acres, but I think the one that really needs the acres is spring wheat. And to Randy's point, in my area, I mean, we're planting less spring wheat all the time, but it looks like a late spring, and the guys quickly just scrap spring wheat then in my area.
All right. Well, now that you opened the door wide open on the acreage discussion, let's go there. So spring wheat, well, total wheat acres, USDA projects up 3.8 million acres. Randy, I'm going to give you a little pat on the back because you were one of the few people that I know that I talked to that said HRW acres were going to be up because of the crop insurance guarantee, right?
Well, exactly. Last, September when their base price was being set, it was a record high. So there was no incentive not to plant the winter wheat because your expense is the seed. And we also had the government that was encouraging double cropping of wheat and with another crop. I mean, they were talking with, doing it with soybeans. So that got the sorghum guys mad because they wanted to be part of the equation as well. But so you got the government who's now, because of the Ukraine-Russian war, we're going to run out of grain. So now all of a sudden we need to produce more. So they were encouraging the planting of wheat and then followed up with a second crop, which would be either soybeans or sorghum or cotton, whatever they wanted to. So there was an enticement to plant the wheat and then look at another crop later.
Plus, the guarantee was high enough to be attractive as well, right? The crop insurance guarantee.
Very, very much so. And what's interesting is when you look at the states that saw the biggest increase, Texas was the state that saw the biggest increase. I think they increased their acres by 25% from the previous year. Well, look at what that state is. I mean, it's very dry. I think there's a lot more abandonment that's going to come into play.
That was my next question. How many of those extra acres are even not going to be abandoned?
Well, one thing that the Ag Outlook Forum did say that I think is correct, and that is they lowered the harvested percentage from their normal 82.1 down to a 77.5. I wouldn't be surprised to see that go down even to down closer to a 70 or 73 in that area. So I think there's going to be possibility of another 1.5 million to 2 million acres that will not get harvested down in the winter wheat areas. And up here in the spring wheat area, our base price for insurance just got finished getting set here at the end of February. It's lower than last year. The other part to look at is that Durham's revenue price is $1.24 above spring wheat. That's, I think, is going to encourage a little bit of durum acres, especially in the north central to the northwest part of the northern plains.
All right, so HRS guarantee 887, down 32 cents from last year. Durham at 1011, up 67 cents. So how many acres do you think Durham is going to pull away from spring wheat out of that?
I wouldn't be surprised to see it pull at least, 1 million to 1.5 million. And you're also hearing, from Canada, they're looking at lowering their durum acres by 6%. So now you've got a kind of another incentive to plant more durum. And if you've got it in your rotation and you've raised durum and you're in an area that can grow good durum, you're going to do it.
All right. Anybody else want to comment on that?
Or just to tag on, or you watch the spring wheat price and what that market has done the last month.
Yeah.
They're not telling you go out and plant more acres, even though, like to Randy's point, I think they should. So I'm thinking spring wheat should be finding a bottom here very soon as people start to realize we can't lose the acres. Remember, spring wheat supplies, old crop, we're down to 15-year lows. So we really can't give up those acres you're talking about switching to durum either.
Well, wheat is completely frustrating anyways, because now we're below the cost of production probably in some instances, but we have really no war or weather premium in this market either, do you think?
Not currently, and the funds, Michelle, are extremely short.
They're short in Chicago.
Right. And one thing we didn't mention, because I sent this text to a bunch of clients in Iowa and Illinois and Indiana, the profitability on something like sunflowers, the effect that the Ukraine war had, that this area that we farm, we're so blessed to be up here, is very much like the climate, the soil types, and the area of Ukraine. The profitability, Randy would have to help me with the math. We don't even want to say it because this is live, but how much money people made growing sunflowers last year was amazing. So there's incredible flexibility of what you can plant up here, which is both a blessing and a curse. If all those commodities are at historical low prices, it's what can I lose the least on. But when we're at these levels, as Midwestern people, we want to talk corn, beans. We're like, hold on. What about flax? What about this? What about
Canola?
Right. There's so many choices up here.
Barley, yes. So how does this acreage mix kind of filter out up here? Especially because we do have high sunflower prices, high canola prices, and everybody's competing for that oil right now. Any thoughts?
Randy's been taking all the hard questions. We'll stick
I'll
with
just
him.
throw them back at
Yeah.
him.
Well, and you also got to throw another wrinkle into that, and that is these crush plants that are getting built. So now all of a sudden you've got, demand source that's coming in play. Right now, North Dakota produces about 200 million bushels of soybeans a year. We export 70% of those. Well, we got a crush plant that's buying beans right now in Spiritwood. That's going to take 25% of what we produce in the state. You've got another crush plant that has broke ground and being built in Castleton. That's going to take another 20 or 22% of our beans. And then Grand Forks up here, I don't know where the stage is at it, but now they're projected to build another crush plant. Altogether, those three plants, if they become reality, are going to take 145 million bushels of the beans produced in North Dakota. Well, now all of a sudden you've got 55 for the export market instead of 140. So now I think that's going to have to push those bean acres and increase that bean acreage, because we're going to see bigger demand on the demand. And we're not worried about exporting to the Pacific Northwest. So we're not worried about, like we saw at the end of February, where our basis levels went from 30 one morning, and by the end of the day, we're at 60 under. We're not going to see that. It's going to soften those basis levels.
So right now, if we, I think last year the projection was we needed at least 90 million acres of soybeans for this market to be comfortable with domestic crush and with the export pace as it was.
Mm-hmm.
So 87.5 doesn't sound like enough acres at this point then.
There's 18 crush plants. At the end of October, there was 18 crush plants that were on the drawing board to be built. That was going to increase the crush capacity by 689 million bushels. We have an ending stocks estimate of 210 in that area. So we're actually now deficit 400 million bushels of soybeans to go into, if things being left unchanged.
But USDA never gets us down below 100 million, Randy.
Well, so then that actually then equates that we're going to have to add 15 to 20 million acres of soybeans to make the numbers work.
So my point being here, we're getting all worked up about Brazil's record harvest and all that. Does it really matter longer term? I mean, it is obviously going to pressure the market, but if we start producing more for a domestic market, isn't that the long-term
Yeah.
bull play here?
I think I know where you're going with that, Michelle, and I think you're right. Brazil has to plant more acres and they have to raise more beans because China's going to be buying their beans, because up in North Dakota, we're going to switch and we're going to crush them now.
Yep.
And before, like Randy said, it was all exports. I mean, if you didn't sell your beans by January up here in North Dakota and northern South Dakota where I am, you're just, the base is going to flop like it did. And I don't know why I haven't figured that out yet, why I still own my beans, but there you go. Brokers aren't right all the time, not even close. So yeah, no, Brazil's going to have to keep expanding. It's a fun time to be in North Dakota, if you ask me, with these crush plants. You know, Randy didn't mention the Aberdeen plant,
Yeah.
AGP down there.
Yeah.
They're pulling a ton of beans from North Dakota to keep crushing.
And
that.
if you looked at their cash prices all year, they've been some of the highest in the entire country.
Right, they have, and then they made it, and I still haven't sold.
you
Thank
still
you.
haven't
Thanks,
sold,
Randy.
right. Okay.
Thanks. Yeah, he's not getting a beer later. But anyway, they have been, and they still made record profits. And that's why the crush plants keep expanding here. I heard earlier in the speech, we talked about we're going to have a lot of meal up here. What to do with that? And I think Tommy's going to agree, like, eventually you guys are going to have a lot more hog facilities up here, and you'll have to feed them too.
And they're looking at exporting more meal as well to some of the Southeast Asia, even Africa. I was in South Dakota with South Dakota Soybean on a trip to Morocco here recently. So we got to find a home for the meal as well. I guess my point being, there's, the market gets all shook up about a record Brazilian crop coming. I know we've had problems in Argentina with the crop this year, but do you think that we're going to be able to stay at a good level here for soybeans, around $14 going into for the new crop price, even despite that, with all the demand that we have coming at this market?
I'll take one hard question, then I'm done. We're not talking about the problems with when China meets with Russia and they're all buddies. We have to understand that probably something's going to happen with China and Taiwan. So when we take premium off soybeans, a couple things. One, can your client who is importing those beans, can they afford them? So as the world markets get shaken up and interest rates explode across the world, can your end user, poor countries were poor before this happened. Now we've had record inflation, which is the largest tax ever on the poor, regardless of what any politician tells you. Poor people are not any richer no matter who's elected. Can the countries who need the food the most afford it? And when you look at China, Taiwan, I personally, as a speculator, someone who owns a seat at the board trade, I cannot go to bed long $15 beans. It makes me nervous. But I can go to bed long calls. Like if the world ends and beans are limit down for 5 days, the world never ends, but wild things have happened since we've been on the stage the last 7 years. We've lived through crazy elections, alleged pandemics that came from bats and other things that seem not to be as true as they used to be. And we've had droughts, we've had floods, we've had lots of crazy stuff happen. I mean, when you talk about these guys' basis levels, we forget that during the harvest, the gut slot of harvest, the Mississippi River was out of water. What a blessing for Northern Plain farmers to have that export business pick up like it did.
I think we also saw record sales in January. We don't know yet, but I think a lot of farmers did take advantage of the high prices. They waited till January because they couldn't make any more money last year. Their tax guy said, don't sell any more grain. And they sold a lot in January, a lot more than I anticipated. I think that pushed the basis down, and I'm hoping it comes back later because our old crop stocks are still tight. So we'll see come summer.
Right now, Brazil's crop is coming on. I don't know if we're seeing a little bit of harvest pressure from Brazil. I mean, we haven't seen a lot yet, but record crop there. Is that something that these guys need to be concerned? Is it going to put a lot more pressure on this market or not?
Oh, I'm going to go in the deep weeds here. Duwayne and I were talking about this a little bit ago, and I'm in the belief that we're going to see a record crop out of Brazil. We're going to see an extremely poor crop out of Argentina.
Does Brazil make up for Argentina's losses?
And right now, where you look at where the estimates are coming into play, we're looking at about a 10 million metric ton extra compared to last year. I think that crop in Brazil or in Argentina is going to continue to shrink, and it's going to, when it's said and done, I think we'll be somewhere between 3 to 5 million metric ton over last year coming out of the combined Brazil, Argentina and Brazil. So I don't think that crop is as big as what everybody's expecting. I look for it, and I don't think Brazil's crop, I think that's going to dwindle a little bit too, especially if the rains come back in again next week. So I think that crop is being reduced as we speak.
All right. Anybody else?
I love what he's saying there, of course, being the bull, but I think the problem with the market right now is the market saw what happened last week. China switched a purchase, I think it was 500,000. They had bought from
500,000, yeah.
Argentina. They just switched to Brazil. And that gave the market it doesn't matter what happens in Argentina because Brazil's got this big crop. But I like Randy's point. He's got a very good point. I think the Argentina crop is horrible. I mean, it's been horribly dry there, but it just never really got that bullish momentum this winter.
Although the meal market is really what has been holding this market together. That's been a result of the Argentina drought situation. So how long can meal stay up at these levels? $500 is historically, we don't stay up at that level very long, do we?
We don't, and then you got hogs, where the prices are not as attractive as what they were. They've been kind of get beat up, but you got cattle prices at record highs. I didn't see where cattle finished today, but yesterday, we put in a technical correction. If we had a lower day today, we might see cattle start to drift lower, but we've got very tight supplies on the beef side, which is helping to support that market. And there's an incentive to finish and to feed. So I think, meal will stay strong as long as, one, unemployment doesn't change much and the economy doesn't go into a deep recession.
So I want to ask you guys, we were talking about, the fund community being short in Chicago wheat. I think they're somewhat short in Kansas City wheat, although we don't really know because we haven't seen a commitment of traders report updated for the last several weeks. But they were still long in corn and soybeans. So we saw this liquidation here the last week up until this little bounce that we've had. So how is this pullback that we've had? It almost felt like in late June, July, that was risk off. That was inflation concerns being taken out of the market. How is it different now? What sparked this latest pullback or that pulled us out of this range that we were in the grains?
There's a lot of money swishing around, and there's one scenario I don't like is that, and this is a great room to tell this to, what makes a farmer bullish is the market going up. What makes the market go up is truly supply and demand and then those funds buying it. We would not have these dynamic markets without money coming in and money going out. When you have a farmer that's bulled up, that's holding product because they have cash, and the funds are really long, when the funds go to get out and the farmer goes to get out, and then people start selling into an options expiration, and a lot of this was the timing of the you all have your farm, your risk, but you don't realize how many tens of thousands of options are going, and we blew through the 670 put, the 660, the 650. There were puts that were worth a quarter cent last week that all of a sudden were 15-cent bid. And when that dynamic happens, people have to sell futures to stay delta neutral. And then the farmer, you could see they're caught long because as I was over there filming earlier, 5 guys came by. 5 guys who didn't know, each of them came by and said, when's wheat going to bounce? I said, 14 wasn't good enough, 13, 12, 11, 10, 9, 8, but now, and I'd be mad too if I could have sold $12 wheat and it's at 8, but it doesn't mean it needs to bounce. And we do these things where these markets take off, and there's no price that people, it's really weird, and we noticed this in the psychology of GameStop and other markets, but when things accelerate, you get more bulled up. And when the funds, to your point, Michelle, when the funds are as long as they are in meal, I like to fade the funds. I like to buy the put. Where the funds have the length, I want the put there. And I think they'll have to cover their wheat at some point. I think they'll get out of their meal and beans. But I looked up prices from where we were 1 year ago today on this stage. Corn is $1 lower in the front month. Beans are $1 lower, and spring wheat's $2.50, close to $3 lower than where we were. Russia is still in the Ukraine. Argentina still has its problems. So as they give you the bull debate, I sit here as a bear and go, wow, we have this much bullish news. It's not a secret. If we know it, the whole world knows it. They didn't come to Grand Forks and just learn this. The fact that corn could break 60 cents with that much bullish news blows my mind.
That's why I asked the question, was there one catalyst, or was it just a combination of things, or has it been like what we've seen a lot of times in 2022? Doesn't matter. It's not about fundamentals.
Well, the margin calls have to be met. Duwayne and I were talking, some people don't like options. I'm like, they should really trade futures because those work 100% of the time. Whether you're right or you're wrong. Every penny on a one lot's $50. And if you don't think options are for you, definitely get involved in futures, and then you'll see something that works. But we have to remember, 1 year ago today, wheat was like double, triple limit up. I left this, before I came on this stage last year, I was caught a couple short wheat contracts. I went in that room, I flipped and got long, and that wheat opened 60 cents higher that night. I mean, the energy of when this rally last year was ETF driven, and the average person's watching TV and they think they should buy corn because they realize what's happening. People always have, people love getting a puppy, but they don't want an old dog. Everyone likes a baby, but when someone gets old, they don't know what to do with this. And this bull market is old. This is an old bull market, and that is a problem. If you want to bet we're going to have a 4-year bull market, while the whole rest of the world's going, wow, agriculture's easy, we love this, America is having a hard time expanding acres, but the rest of the world's not.
So Tommy's putting down the corn market like an old dog. Just put it down.
No, because I wouldn't go to bed short corn on a 60-cent break either. I like to sleep at night. I've been enjoying my sleep.
So there's a lot of advisors like yourself that have been talking about how these historical prices are not going to last very much longer. That if we have a weather situation that's even close to normal or even better than we had this last year. So, and you heard Daryl talk about this morning, the fact that he thinks we're going to have a pretty good planting season, a better growing season over here in the Western Corn Belt. So right now, have we seen the highs, and what are you advising? Are you guys in the camp that the highs are in and we need to be doing something to be defensive as farmers?
You start.
That seems like a medium question. I'll take it.
Okay.
Randy only gets the hard ones.
Randy gets the hard ones, yes.
Again, going back to what I said 20 minutes ago, do you own 22 crop, 23, 24? If you have your 22 under control and you get your 24 under control, I'm okay with being more open in 23. But when you look at the futures market, we'll talk 2 weeks ago, futures market, Dees 23 was $6, Dees 24 was $5.50, Dees 25 corn is $5. Now, all those have shifted about 20 cents lower. When you're scared to sell a crop next year, I like to go out to the following year. But when you see that price, you don't like it. And so the market, the Board of Trade, not us, the Chicago Board of Trade, the single most, CME group now, the single most important place to determine price. Obviously, you get your price locally, but the place where price is established says corn is going to be worth 50 cents less every year. So I say, wow, the 2-year note hit 4.9 yesterday. The 30-year bond hit 4%. The 10-year hit 4%. If we're having so much inflation, why are commodities dropping out? How did natural gas just go from 9 to 2?
Right.
So there's signs that, yeah, there's inflation. I think something we should talk about is how aggressive is the Fed willing to kill the market, or is the Federal Reserve just willing to let people pay higher prices? Are we going to run hot in the economy? And we'll find out tomorrow. We have unemployment at 7:30. It's going to be a key number because as you drive around, there's still help wanted. There's not one person out in this crowd who wouldn't hire someone if they could. We still have a labor problem in America with rampant inflation and a Federal Reserve that's just ramping up prices. And that, if you study people like Peter Zion, he's like, we're having a paradigm shift in interest rates. And only the old guys like Randy here remember what that was like, or Don. I mean, I'm 50 years old. I don't ever remember buying anything and paying 10% interest. You're like, oh, that's a bargain. That's what I'm saying. So we have to change the way we're thinking and market bushels by that. This bushel has a cost of storage that's doubled and tripled. And whether the market goes up or down, the meter's running on that cost of interest.
Go ahead.
I can go into that too. I love that question. I'll try to be
Put your
short.
farmer hat on now,
Yep,
Duwayne.
exactly.
You're a young farmer.
Oh, young farmer, yeah. And I'll tag on that interest rate. I think, obviously, I'm a bull. I think we have a weather scare. I think we rally. I think you have to be aggressive selling that because, like what you mentioned, Michelle, how many bad yield years in a row can we have? We are due for a really good big bumper crop in the nation. I'll admit that. And if we get the acres planted, it's going to be this year. I just think we have that scare. We get up there, we sell it, and then sell new crop really hard and sell the cash, guys. Because something's going to happen that we haven't seen in 20 years, and that's the interest rate, the cost to store that stuff. Now, I'm going to say all that, but then to Randy's point, you're going to build crush plants here soon, and if you guys can store your beans until December, January, it's going to pay for itself too. So look at that typical broker talking both ways there again. So I'll just hand it off again.
But that's a basis play, not a futures play.
Right.
Right. That is a basis play. That is not a flat price. That's where futures are so powerful that you could stay short those futures, catch that basis, and you could double dip.
So do you lock in basis at this point, do you think, or not? No.
Nope.
Okay.
No, there's no risk to lock basis at this
Great.
point, because especially if we're seeing local demand build, the basis should tighten up. And
And we've had an inverted market for a while.
for quite a while. And that's the other part. We're still inverted in a lot of the markets. And until we start to develop a little more of a carry or build our stocks, we're likely not going to see a carry in the market. We'll just continue to see inverted. But I agree with what Duwayne's saying. I mean, I think we've got a chance to see these markets bounce. I don't think I would expect April, May, we're going to see a little better market. But I think by, late May, June, you got to have most of your crop marketed and priced. And, because I do think we will see this market drop off, especially if Daryl's right and we do get the crop planted and we do see the acres and we have a better than average production or even average production.
I'm a little curious out here in the crowd. Let's just do, and I'm sorry for the folks at home that can't see the hands that go up, but how many of you here have started to sell some 23 crop? Raise your hand. Wow, that's pretty good.
Did they sell it last year?
Did you sell it last year? He said.
They sold on the high.
They sold on the high. That's good.
Their neighbor
So,
sells on the low.
how many of you have, let's talk about percentages. How many of you have 20% sold? Okay. How many have 30%? 40? It's going down. 50. Okay. So we have a lot of people that have made about 20% of their sales so far. Is that on corn, beans, wheat? How many of you are corn producers this year? Okay, how about soybeans? Okay. How many people are planting wheat this year? Oh, a lot of hands. What other crops should we survey? Barley.
Gotta have beer. No barley, no beer.
It's
Okay.
actually the pet food. How many
All
are
right.
doing it for pet food market?
Pet food, just a couple. The other thing we should talk about is specialty crop acres. You have that flexibility up here as well with peas and lentils and that sort of thing. Will that have much of a play in the acreage mix up here?
I don't think so. I mean, I think right now, beans are going to be kind of the leader to try to get the acres. I mean, to these guys' points, our expenses or the input costs are quite high. Fertilizers come down nice. And I think that is adding maybe a little bit to the corn, looking at more corn. But I think the corn acres will increase in the southeast corner of the state, which, from 94 all the way over to, the Bismarck area. That region, I think, will see more corn acres. Everybody, I think, is going to increase on their soybeans. Sunflowers, I probably see a little bit of a pullback. I look for canola to see a little more acres because they've had tremendous yields. But I think some of the other specialty crops will take a little bit of a backseat. And I think dry edible beans will see a little bit of a pullback in their acres. We haven't seen as an aggressive move with price for the edibles, and I think that will pull some of those acres towards soybeans.
Okay, so if the survey out here is basically that a good percentage of this group has, say, 20% of their sales made for 23, what percentage should they be at, you guys? Is that too low?
It depends on where they are in 22 and 24. And I know I keep going back to that.
Okay.
And it depends on where they live. Like a farmer who lives up north along the river, it's going to be, there's a lot of moisture. It's going to come up. They're probably not going to be as aggressive seller. A farmer who lives south of the expressway, a totally different environment. We have, I think I saw from NDSU, we have did you tell me, Randy? We have 12 different environments of weather in North Dakota. NDSU put out a study, and it's not as simple as other states. I think the biggest thing is just to be ready to pivot, be ready to flex. Where are we flexing to if we have a problem? We could sit up here and do this for 2 hours. None of it matters. Mother Nature is ultimately going to say, I'm large and in charge.
Yeah.
Hold my beer. This is what you're planting or you're going PP.
All right.
a little bit on that. At 20%, I think is a great place to be right now. I mean, this time of year, you probably should be. And actually for North Dakota, South Dakota as well, that's a fairly high percentage. We usually plant the crop, harvest it, store it, and wait till next year to sell it. It seems like it's just a little bit different than the United States.
Can I ask a crop insurance question?
Sure. Roll the disclaimer.
All right, who's supposed to be hosting this?
Well, I was thinking of the thing. Would this, and we would love to buy put options for people, but do you think this is a good year because volatility is down in crop insurance level? Wouldn't this be a good year to go from 70 to 75, 75 to 80? Let's sell some crop insurance here, folks. But isn't that the cheapest put in the world? So lean on crop insurance heavier this year, throw a couple puts on their market, take your 20% forward sales. Now we have a marketing plan.
Yeah, 75 is the best, is the sweet spot when you look at it for crop insurance. That's where the subsidies are the best, and that's where you get usually your best return. And I'm even in the camp, if you're looking at trying to make a decision between ARC or PLC, and I'd lean towards ARC, and then I would look at the money that you would have thought you would have spent on SEO, buy up a level in your crop insurance, go up to 80%, just because that's your farm's the guarantees. So it's actually, you're going to, see it a little quicker than if you went with a county-wide one like SEO is. So, but yeah, I definitely, you want to look at the crop insurance as your base and then sell off of that.
This is exactly why at my business, I can't take any business away from Randy. He has good answers like that on crop insurance. No, that's perfect. Stay away from the area-based insurances and lift up insurance on your own policy as well. I'm going to go back again to what we do next year. This big drop in prices, if you're 20% sold, you got a lot of crop left to sell, right? Now, we're farmers. We should be selling and not buying, right? But maybe courage calls. And I don't know if you're a fan of this, Tommy or Randy, but August short dated 650 call right now, August short dated, so new crop, is about 11 cents. If you buy that call option, and that gives you the courage to sell on this rally that we think will happen in the spring, I don't care how much money you make on it. I just want you to get sold. And then of course, if it goes above 650, goes to 7, you gain that in between. So if that gives you the courage to sell, then I think that option did its strategy. I just wanted to know what you guys thought about that.
100%. But I would be so much more comfortable if someone was nervous during the rally and then we had this break and they go, oh my God, I was short 580 corn or 590 corn or 1410 soybean. And then we have this break and then come in. I don't like when it would be so much more fun if they were a little nervous, they were oversold and then bought those calls. That's what I'm trying to say. Buy and dip, sell and rips. If they're long grain and then they get longer because it was on sale, what if it becomes more on sale? That's the problem. That ultimately that's the
Texas
risk.
hedge.
Well, sometimes things go wrong in Texas, but yes.
So I'm curious, as we look at prices this year, even if they are a little bit lower than what we saw in 2022, with the exception of interest rates being up, shouldn't we have a little bit better, profitability chance because inputs have come down, fertilizers down, we're off of our record highs on diesel prices, all those sorts of things. How much will that help?
Darn it, I got to take one of these tough ones. Yeah. No, I think this is another good year. Well, and why not? Just crop insurance wise, we just, second highest spring prices ever. So your revenue guarantee is already up there as long as you run the planter over it. And if you don't run the planter over it, you had high spring prices, so prevent plan will be high too. So no, I think income is going to be very good this year, one more year. But I also like to get on Tommy's board of it's going to be very good if you sell this next rally. Because if we do produce a big crop, and we will head the other way because we have ration demand, right? The last 2 years, as much as we've rallied corn, now exports are really dropping. So we have already ration demand. There's no doubt about that. So this year is the year to sell. And to Tommy's point, maybe sell a couple years.
Real quick, Michelle and group, this is a room full of sugar beet growers, and it looked like we were going to have a major problem getting these sugar beets in. And then we pulled in, are they called tap acres, guys, right? And congratulations to you all. I do believe these are some of the best, finest farmers in the world to slam in that sugar beet crop, get it in, get it out. Congratulations. You're just proving what technology and hard work can do. Definitely up here, it's not over till it's over. 50-year anniversary of Crystal Sugar the other week. And sugar is so important to the valley, and the folks watching from the Midwest have no clue what we're talking about, but they should really come up here, and they will gladly take some free labor and harvest some beets.
Well, it definitely has been a really fun last couple of years to be in the business. And I have to say, watching the markets with all of the black swan events that we've had, agriculture has been so resilient through all of this. It's been really amazing to watch. Chris, I don't know if you have a microphone that we can, does anybody have any questions from out in the crowd? Certainly, we want you to be able to participate. I mean, we try to anticipate and ask all the good questions if we can, but is there anybody that has any additional questions out in the crowd? Don't be shy. There's one right back there. And we'll try to repeat these on the air so that for those of you that are at home that are watching the live stream, can't see our folks.
I like your, at the beginning, I liked your word theoretical, because, like they're already predicting 91 million acres of corn, but only, even keel on the soybeans. And yet we got all these crushing plants going up. I mean, we got to find acres to even take care of all those crush plants. But I was like a little in my 20s, and I'm getting old already. But I was in my 20s around 1972. Do you realize the end of Grand Forks was right on this street over here? I mean, from that point on to the west, it was all farmland. And then you go, this is 13th Street, and you go down 32nd, which is another 19 blocks. That's where Grand Forks ended to the south. And the point I'm making is, I was reading an article that the United States does not really have any more ability to expand acres. So South America basically is going to take over. So it just strikes me, I mean, we've got to make do with what we've got. And you were saying that, like, you're saying Brazil's got a big crop. Sure they do, but they're also going to have to feed Argentina, because Argentina's going to be short. So, I mean, even now the price of soybeans, they went down, but they're almost back to their high, where they were a few days ago. So there's optimism for that. I don't know if I see too much optimism for wheat. But, I mean, where do we go from here now? I mean,
yeah. So what's your, what
well, my deal is,
like
how can the USDA theoretically give us 91 million acres of corn and only 88 million of soybeans? I mean, where did they come up with these acres?
Right. And if you look at total acres, we're going to be up, what, 6.2 million acres? Where are those going to come from? Is that kind of the question? Where do all these extra acres come from?
I can kind of start with this one. Yeah, first we got to remember USDA Outlook Forum in February is budget purposes only. So you could kind of say they're actually going to look at the bottom line, the ending stock, and almost work their way backwards. Now, year over year, their acreage was about right. It's about consistent. And you're right on urban sprawl. Estimated about 1 million acres a year we lose. So, yeah, it is a big deal. I'm right with you. Where are these acres coming from? Because my point is, if 750 D's corn last year couldn't get more than 88 million acres, how do we just magically get 91? And if you look at the maps, where does that 91 million acres have to come from? It's got to come from the Delta and from North Dakota. Now, I've heard everyone up here saying planning or budgeting for more corn acres. That's all USDA is doing, is they're putting it out there. Like I told Tommy, I'm budgeting for about the most corn acres we're going to planning on budgeting on our farm. I just know right now it's not going to happen. So remember, don't take it with a grain of salt. Now, sadly, of course, it feels like the market didn't take it with a grain of salt. It feels like the market took those numbers and ran with it, sold off. Frustrating for all of us because we haven't planted a single acre yet, right? And the worst part is now I'm the one talking about weather and planting delays. If you actually read the market headlines, they're talking about really good start to U.S. planting season because Texas is really warm right now, and they're about 5% planted. Yep, they're more than that. They're really rolling. So actually, it's negative right now. So don't worry about the USDA numbers so much. June 30th, we'll find out what the acres really are, and then like Randy said, then they'll change the harvested acres later.
Right, and even the March 31st intentions, the planting intentions, those you have to take with a grain of salt too, don't you think?
For the most part, yeah, because I mean, they're again intentions. Mother Nature is going to make the decisions from there. What happens with whether or not we're going to get the acres planted or not. And yeah, I mean, to Duwayne's point, I mean, the Ag Outlook Forum is basically what I look at it is more on the demand side of things, where not so much the supply side. That's going to change. And in the way I look at how they do that report, it's a bunch of economists that get put in a room that haven't seen people for a couple of years, and they put together their numbers. And it is purely for budget purposes to figure out how the government is going to fund farm programs going forward. And that's really what it's for. And now a little tidbit that I read earlier this week about, we talk about the crush plants and about the the renewable diesel side of things. I think it was in January, the U.S. imported, I think it was 500,000 metric ton of restaurant waste oil from China to run through our renewable diesel plants, because we don't have enough soybean meal or enough oil to run through them ourselves at this point. So we're actually importing waste restaurant oil out of China to feed our plants to make the diesel fuel that a lot of these carbon neutral states are looking for.
Yeah. Well, this renewable diesel, sustainable aviation fuel market is going to be definitely a game changer, it looks like. We have a question right over here.
Two questions. When you look at soybeans, Argentina hasn't the government subsidized them, so they got rid of basically all their soybean. They're going to have to import, am I correct, soybean from Brazil to
They already
sustain
are.
them. So, and then you talk about Brazil having, and China going to take some of that. Are we going to be short on soybeans on this stuff, or sometimes we talk about the Brazilian crop, how big it's going to be? Is it going to be all there when China takes their share, Argentina takes some back to there?
Duwayne has some soybeans he could still sell.
Yeah.
I mean, come on, guys. The market, when the markets rally, you don't want to sell. When they break, that gentleman who asked that question, thank you, sir. Great question and great question. But I never get I'm not intimidated that there's 500 of you here, and I think the markets are going to go lower in years to come and be painful. And I'm not upset that you've all done very well the last few years. I'm unapologetic. I think it's awesome you made a ton of money. I think it's the job of the market to get the money back from you now. Fighting over these, this country has this. When did we all become experts? We became experts on elections a few years ago. Then I switched to a pandemic expert, and then I switched to a Ukraine expert. Like, the most important bushel that matters is yours. And if you understand your bushels, your basis, and if you have a bin, you're going to do great. And if you worry about your farm and not these little details of these other countries, because you're not going to be able to take your grain from Grand Forks, North Dakota and bring it down there. That's not your job. It's so far to go around. So it's fun to look at these things on a cold winter, snowy day, but ultimately, what's the best price you can get around here, and when do you want your money? And keep it simple. Focus on the bushels. I told a man, he came up to me in the hall, he said, what do you think about the markets? I go, I'm never as worried for this area about the price as the bushel. And if you grow the bushel in Dakotas, you'll be okay.
Okay, the other
I know
question.
that doesn't answer your question, because I don't know the answer is the problem. So I had to go around it.
At least you admitted it.
Yeah, no, I'm not. Yeah, I graduated last in my class. I pay the most taxes of anyone I went to school with, but I graduated last in my class.
The other questions I have, it gets me so irritated. They come on the news and they talk about the people up and down Main Street, the price of eggs, the groceries and stuff like that. But you got to realize we got something, and I know you're going to condemn me on this, but sometimes these prices have to stay there. Do you think these John Deere tractors and combines, the labor in Grand Forks went up from a couple of weeks ago, $20 an hour? Is that coming down? That's never going to come down. And how are we going to say, and you take interest rates, what if interest rates go up to that at the 8, 9, or 10%? What is going to be left in it for us? Are we going to be skimming by just by the thread of our teeth? That's what worries me out there. And you talk about the TV and we talk about that. Oh, geez, the people up and down on Main Street are really suffering. True, they are. Because the guy that's working out, that's getting a 2% increase on his wages, I don't know how the hell he's making it. But if we're going to be there, if these prices keep going down and nobody else is going to drop their prices, the labor market and for getting a truck fixed or John Deere is not going to come down, and that it's going to be tough to make it. I don't know where it's going. Just a comment. It just gets me so irritated on some of that stuff.
You're 100% correct that there's no doubt this room's going to put the most expensive crop they've ever put in with the highest labor, with the highest inputs. That's why I wonder, why aren't you more worried about the market going down? The market going up is the easy part if that happens. What's going to hurt are those things you just described. And then if the market goes down for multiple years, the question I'll ask you, you don't have to answer it because your friends and neighbors are here. How many years can you go without making money? Don't yell 10 or 20, but you can go a lot of years without making money. And I think that's what's going to happen in production ag.
Well, and the pendulum always swings,
Mm-hmm.
but it always swings too far the other way,
Yes,
usually.
yeah, exactly.
Correct?
Yes. Real quick, a friend of mine told me about a podcast called Escaping 1980. It's a 7-part series. If you like podcasts, go to your iPhone, go to however you listen to Spotify or your iPhone, search Escaping 1980. It's a 7-part series about what happened in the 80s. And if you're old enough to remember that, or if you're young enough and don't remember that, you should really listen to it. It's like going to college, but there's no test at the end. It's by far the best podcast I've ever listened to as far as a series. What's so interesting about Escaping 1980, it was recorded 2 years ago before there was inflation. So as you're listening to this podcast, remember that you know how the story ends. Great question, sir.
Yes. Any other questions? There's one right here. We're going to take maybe 1 or 2 more questions, and then we'll kind of try to wrap things up a little bit here.
Because the percentage of the soybean crop is that's being used for fuel is going up so much. Anybody think that they're going to revisit protein or oil premiums anytime down the road?
Randy.
Yeah, Randy, you've been taking all the hard questions. Go for it.
Randy's our hard question guy.
I don't think so. One of the things is that China likes to import our beans because of the quality of them. So they do like to import ours. But now that we're seeing a little bit of a change as far as the dynamics is concerned, Brazil is expanding. And every year they're going to add 2.5 million acres of soybeans consistently. They're not looking at, I saw a chart the other day that showed that there's 148 million acres right now in cultivation in Brazil. There's 480 million acres that are in pasture. And then there's, 2.1 billion acres total. And then the rest is in forest and in urban. They're looking at tearing up their pasture. And they're looking at now giving up their number 1 ranking as far as the cattle herd and going into soybeans and into cultivation. So the pendulum is swinging so that the export market is going to Brazil as far as corn and soybeans. They're the largest exporter right now of both markets. So we're losing out on that side. So we have to develop something domestically to use our product. And that's where I think the renewable diesel is really going to come in and help our markets a lot more. So we're not going to be as dependent on our exports anymore. We're going to be more dependent on local demand.
Well, you're looking at crush capacity expanding, 25% in the next 2 or 3 years here, just because of that pull from renewable or green fuel, right?
Right. And a lot of it is because everybody's trying to go carbon neutral.
Right.
And when you look at renewable diesel from soybean oil, and the only reason they pick soybean oil is because it's the most readily available product.
They can use other stuff.
They can use animal fats. You can use corn oil. You can use canola oil. Not so much because that's a higher, for healthier. So they'd rather keep that in the human consumption side. But anyway, we're looking at trying to get to carbon neutral. And if you're looking at diesel fuel from crude oil, it's not the correct number, but it's when you look at scale, it's right. That's about 100 score when you look at it for carbon. When you look at the bio or the renewable diesel out of soybeans or out of soybean oil, it's a 38 carbon score. So if you're going carbon neutral, where would you rather start from? 38 or 100?
Right. The other appeal is that renewable diesel has the same characteristics as
diesel fuel.
So it's a drop-in. You don't have to worry about blending, right?
Right. It's actually diesel fuel when you're done. It's not like adding soybean oil to diesel fuel and having biodiesel. This is taking soybean oil, refining it to such a degree, which is way over my head. And at the end, you have diesel fuel. And the plant in Spiritwood that's going to be crushing soybeans this fall is sending 100% of their soybean oil to the Marathon plant in Dickinson. And that is going to make the renewable diesel fuel that goes to California. 100% of it is being shipped to California.
For the low carbon fuel market.
For the low carbon fuel market.
Right. And we have all of these airlines that are lining up right now for sustainable aviation fuel, correct?
A big plant being built in Alberta for canola, crushed canola, that's tied with United for the aviation fuel.
And you want to know, tip of the iceberg there, you want to know how much fuel we use in jets? We're all happy with ethanol and biodiesel. We start putting this stuff in jets, there you go. Then you can be really bold up again. Probably a few years down the line, but look at where the money is.
Right,
the money
and you're
is
not
on
going to
those.
have
I'm going to throw my
an
beans till then, Tommy. No, I'm not.
You're not going to have an electric airplane.
No.
So that is
I'm
part
not
of that.
riding in it.
Yeah.
Sounds like land prices are too cheap here, Michelle.
Oh, I don't think these guys would say that, would they? I don't know.
A lot
Are
of
there
optimism here.
Any other questions from the field or from out on the floor? So let's just kind of wrap up here. Let's have each of you just give kind of your bullet marketing advice as we go into this 2023 crop season, because I still hear a lot of optimism out here among farmers.
Well, farmers are optimistic, and that's why we love working with them. Something that I could bring value to is that I traded bonds at the Board of Trade. I trade the interest rate curve. Don't be so afraid to talk to your banker about where you should be on the curve. Even though your banker might know when you walk in and ask a question, they're going to ask why you're asking about the curve. But it's okay not to know, but find someone who's smarter than you. You don't need to know everything, but I'm way more worried about interest rates than I am about production or price or anything else. So get your interest rates where you need to be and use that to your advantage and educate yourself. No matter how old you are, you could either be making money or you could be paying money. And I'd much rather see you be making 4% than paying 8% and losing 20% on a crop. If the markets rally, God bless, we'll be here again next year. God willing, it'll be a great story. We'll have lots of beer and everything else.
All right.
So if the general room is about 20% sold on new crop, we got a lot more to sell here. Go back, look at your spreadsheets, look at your break evens. I mean, that's always the best. When I get confused, that's what I do on my farm. Set some price targets, some price goals, because now we got a chart that you can see where we were. And I guarantee you, everyone's about like me. Well, when we get back there, I'm going to sell. Okay, well, make that order now, or maybe buy those courage calls now on the rest of your production or some of your production. So you will make that sale when it gets there. So I guess my advice is to go back to the spreadsheets, look at your break evens. Let's have a marketing plan going into this year, because I'm with Randy. I don't think the highs are in yet, but that doesn't mean you just forget everything we've said here today and just wait for the highs, because we will miss the highs anyway.
And Randy, since you had all the hard questions today, we'll give you the last word.
Well, and since, Tommy was so elegantly put it that I'm the old one up here too.
Not by much, like a couple of days or something.
Yeah. But no, I do remember the 80s. And
How old are you, Randy?
I'm old enough
Social
to remember the 80s.
Is your Social Security check as big as I think?
Yeah,
Or is Medicare really awesome, or is that just a statistic?
We got to stop soon because he needs a nap
It's
soon.
a good thing Duwayne's between us. No. I remember, I'm 59, by the way, just turned 59 last year.
How many years have you been 59 is what I'm asking.
Do I look that old? Anyway, I remember in 1981, my dad bought a brand new tractor, an 835 Versatile. And that's when interest rates were high. And I think it was like a 22% interest rate on that tractor. We finally got it paid off last year.
Randy
with the mic
drop.
No, I mean, I guess I kind of agree with Duwayne that I do think that we are going to see, a little bit more push in the market. I think we're going to have a bid for acres where we'll see these markets rise up a little bit. I do agree that you need to get targets in place, get them, put some orders out there, be ready to sell at certain levels. I would think that we should be sold up to our insurance guarantees sometime in that June timeframe, and then wait to see where our crop comes into play. But I do think, I kind of agree with Tommy. I think this year could be a rough year, but I think it'll be in the back half of the growing season.
And it's always hard to predict prices. So that's why we end with what's your marketing advice? Because even if you can't predict where the market's going, you need to have a plan in place, basically. All right. All right. If you missed anything and you want to go back and see it, we are going to have this banked on the Farm Journal YouTube page. And I believe CHS is also going to be putting this full recording up on their page as well. We will have excerpts the next couple of days or mornings on Ag Day TV, and as well this weekend on U.S. Farm Report. And I want to thank Randy and Tommy and Duwayne for doing such a great job today. Give them a round of applause. And our thanks as well to CHS and the agronomy or the ag services folks for having us in here for this roundtable today. It's been a pleasure. We're going to round out the broadcast by just saying thank you, and we hope you have a great 2023 growing season.
Thank you again, Michelle, Randy, Duwayne, and Tommy. And thank you everyone for coming as well.